Yes, we can.
Yes, we
Okay.
can.
Okay. I think people are joining now, so I'll just maybe if we can get to like. Okay, so what I was trying to say earlier is I don't know where the internet started messing up, but what I was trying to say, and please, in case my screen is frozen or something, just unmute and tell me. I mean, I might get so carried away in the explanation, I'm not even checking the chat box. So please, just unmute and let me know. So I'm not just talking to myself. So I was explaining something about the tax band. I said that a lot of mistake that a lot of people make is they come and ask, they'll say, okay, Perpetual, I have a chargeable income of, let's say, 1.6 million or a chargeable income of 3 million. What tax rate should I use? Should I use 24%? Should I use 21%? Should I use 19%? And my explanation will always be that this tax rate does not work that way. It's not as if you come to this tax rate and pick a particular rate and apply on that 3 million that you have or apply on that 24 million that you have. No, it is on a graduated rate. So you split your income into these categories and then you apply the rates. So to explain, I said I'm going to use like two scenarios where we have somebody that has a chargeable income of 3 million and someone that has a chargeable income of 700,000. And I will explain how we're going to apply this rate. So can somebody please confirm that they are hearing me and then my screen is not frozen so that I'm not talking to myself? Yeah.
Yes, we can.
Please,
Okay.
how we
We can hear
chargeable.
you. Okay, thank you very much. Okay. So the first scenario we have is somebody that has a chargeable income of 3 million. So for the person that has a chargeable income of 3 million, the law says that the first 300,000 of that 3 million should be charged at 7%. So you come here, you take your 300,000, you take your 7%. Okay. Now remember that out of this 3 million, we've taken 300,000. We still have like 2.7 million. Out of that 2.7 million, the next 300,000 again. The next 300,000 is going to be taken at 11%. Remember that we still have some balance left. We've only taken 600,000 out of this our 3 million. So we take 500,000 again from our 1.6 million left, 1.4 million rather. So we'll take another 500,000. This new 500,000 naira is going to be at 15%. Okay. Now we've taken how much so far? We've taken 1.1 million so far. We still have like 1.9 million left. So we can still take another 500,000. We'll come back, we'll come to the next one. We'll take another 500,000. We take another 500,000. This next 500,000 is going to be at what? 19%. Okay. Now we've taken how much so far? We've taken 1.6 million so far, right? The next tax band says that 1.6 million. We cannot take this entire 1.6 million because if we take the entire 1.6 million, it's already higher than our chargeable income. So we take the balance, which is 3 million minus 1.6 million that we've taken so far. That is 1.4 million. We take 1.4 million. And that 1.4 million is going to be at what? 21%. Now, you would notice that at the end of the day, if you come here and you had everything together, okay. It still gives us the 3 million naira that we have initially. So the whole essence of this graduated tax band is just a way of you splitting your chargeable income into these different tax bands that you have here. So it's not as if when you have 3 million, you go and pick 24% and apply on the 3 million. No, you break it down into pieces. So to get the payee for this person that has 3 million chargeable income now, so we just multiply this by this. So the payee for someone that has 3 million chargeable income is 518,000 naira using the graduated tax band. I don't know, please can somebody unmute and let me know if you understand what I've done here? So I'm not just talking to myself.
Well understood.
Well
okay.
Understood. So in other words, you'll be remitting this amount to wherever. For instance, if it's Lagos State government, you remit this 518 to Lagos on behalf of the fellow.
Yes. Okay. So this 518, this is assumed that this chargeable income is annual. So we divide this 518 by 12. to get how much we'll pay on a monthly basis to the government on behalf of that employee. Yes.
Okay.
So bring the conversation very close at home. I'll also do the same thing for someone that has an income of 700,000. I don't know. I wish that somebody can so can anybody unmute and just tell me the process of what I would do to get the payee for someone that has 700,000, please?
All right. Hello. Good evening.
Okay,
Okay.
So to get the pay of
has
someone that has 700,000.
700,000 chargeable income. We'll take the first 300,000 at the rate
Okay,
of
so
7%.
Okay, please take it one step at a time. You'll be telling me you are the teacher now, so I'll be writing it. So I'll take the first 300,000 at what rate?
Chargeable income at 7%. Then
Okay,
the next 300,000, remember we've taken 300, so we have 400 left. The next 300, we'll take it at 11%.
Okay, ma.
So the
Okay.
difference will now be 100,000. Then we take that at 15%.
Okay. Okay. Please, do we all agree? Do we all agree with these treatments? Thank you very much, ma. Do we all agree with these treatments?
Yes, we do.
Yeah.
Okay. Okay. So, I mean, we are halfway done. If we understand, that means if we can understand this part, that means we're almost done. So fantastic. So let me now come back to this place that we are. Let's come back to the payroll we're computing. This was just for explanation's sake. So now you are an accountant in a company and you have like 100 or 200 employees. I do not expect that we'll not start picking Ebube. We'll do for Ebube. We'll not start picking them one by one and be preparing their tax ban, preparing their payee one by one. It's not gonna work. All you need to do is we need to use an Excel formula that once we drag down, it calculates the payee for everybody. We cannot be doing Ebube. We'll finish Ebube. We'll come and do Toby. No, it cannot work that way. So we're going to use an Excel formula to capture all of this. Now, I'm sure somebody asked a question then, and I said I was going to reiterate it when I'm doing this explanation. So somebody asked something that, what if somebody has a chargeable income that is not up to 300,000? What are we going to do? Are we going to take 7%? So when you see somebody that has a tax and chargeable income that is not up to 300,000, you are not going to take 7%. You're going to do minimum tax. The person is going to pay minimum tax, which is 1% of that particular amount. This is me assuming that this amount is not less than 30,000. If the amount is less than 30,000, it means that the person would not even pay minimum tax, right? So if the person has below 300,000, you will not use 7%, you use 1%. And I'm going to factor this in when I'm doing my computation, when I'm doing my Excel formula. So the first formula that we have is if equal to if our chargeable income, if it is less than 300,000, this figure here, we're going to fix it. We anchor it. If our chargeable income is less than 300,000, I said that we will just take 1%, which means that the person is paying minimum tax. We'll just take 1% of the chargeable income. Okay, I think that's clear. 1% of the chargeable income. Then if we'll do another if our chargeable income is greater than or equal to 300,000, right? If it is greater than or equal to 300,000, so I'm going to anchor this N2. If our chargeable income is greater than or equal to 300,000, then we're going to take 7%. We're going to anchor the 7% as well. We're going to take 7% of 300,000. Then we anchor this as well. Then we close it and then we close it. So let me do a recap of what I did. I said the first scenario is we're saying if our chargeable income is less than 300,000, please take 1% of the chargeable income. If our chargeable income is greater than or equal to 300,000, take 7% of 300,000. Enter. And then we drag down. Please, can everybody confirm that my screen is not frozen and you can hear me every time?
Yes, we can hear you.
Okay, so just to test if that's minimum tax is working, I'll come here and assume that there's a new employee, maybe like a casual worker or whatever it is. Let me just name this person Dundee. Okay, And then let's assume the chargeable income for Dundee at the end of the year is 250,000. So I want to see what, when I drag down, I want to see what is going to pick for it, the figure we're going to have. So you can see, unlike every other person that we're having like 7% of 300,000, is 2.5 that we got for Dundee. Because he only took 1% of the 250,000 because it is less than 300,000. So that means that our Excel formula is working well. That's the first stage. We've taken care of this first part of the tax band. We've taken care of the tax A, the first one. Move on to the next one. The second 300,000 naira is at 11%. So do this, we'll say equal to, if our chargeable income minus, remember that we've taken 300,000, right? If our chargeable income minus 300,000, if our chargeable income minus 300,000, if it is greater than or equal to this 300,000 that we have here, if it is greater than or equal to 300,000 that we have here, then please take 11%, which is the next tax band. Please take 11% of this 300,000. Take 11% of this 300,000. Right? We'll not come again. We'll say if the first assumption we did is that if it is greater than or equal to 300,000, we'll not come again that if our chargeable income minus 300,000, which was the first amount we took as well, if it is less than 0, because it's possible for it to be less than 0, because if you did for this Dundee now, 250,000 minus 300,000 will definitely give us a negative value, right? So that's why we have to put this formula. If this chargeable income minus 300,000 is less than 0, right? Then put dash there. Otherwise, take 11%. I'm going to anchor it. Take 11% of the balance, which is our chargeable income minus 300,000. So you can see that what we have here is dash for this Dundee. So I don't know if we have any questions on this formula that I've used. Do we all understand it?
Please, can you take it again?
Okay. So the formula is, first of all, we're saying equal to, if our chargeable income minus the first 300,000 naira that we took, you can remember we took 200,000 for the first step, minus the first 300,000 that we took. If it is greater than or equal to this 300,000 that we have here, which is the next tax band, if it is greater than or equal to 300,000, which is the next tax band, then we are telling Excel to take 11%, which is the next tax rate. We're taking Excel to take 11% of this particular amount. Take 11% of this amount, right? And everybody is okay. We'll now come again and say, if this is our chargeable income minus 300,000, if it is less than 0, because it is possible, if it is less than 0, then please just put dash there. Otherwise, take 11%. We are anchoring it. Otherwise, take 11% of the balance, which is now of our balance, which is still chargeable income minus 300,000. And then we drag down, and then we have our figure. Moving on to the next, we've done for this second part. For the second.
Sorry, I have it.
Okay, please proceed.
Okay.
I can hear you.
Inside the formula now, I noticed that there's a place you impute that 300,000 manually, and
Yes.
there are instances that you just click on it. So if you either input it manual or you click on it continuously, will it still give you the same thing? Like the
Yes, it
one,
will
like
give
the
you.
300,000 you are.
Okay,
Okay.
it will give you the same thing, right? And the reason why
Yeah.
it will give you the same thing, just make sure that you fix the cell where that 300,000 is. The reason why I am putting the figure manually is because you would notice, you would realize why I'm doing that. If I start putting it on, if I say chargeable income minus 300,000, if I refer to the cell, it means that by the time I'm doing for this one, I will not say chargeable income minus this, making my Excel formula to be unnecessarily long when I can as well just put the figure there. Do you understand? So that's the reason. Exactly. Okay, so for the next step, which is the next step of the tax band, was saying that equal to if our chargeable income minus, now we've taken how much so far? 300,000 plus 300,000, we've taken 600,000. If our chargeable income minus 600,000, if it is greater than or equal to, if it is greater than or equal to 500,000 that we have here, then we're telling Excel that please take 15%. Please take 15% of 500,000. Okay. Then we're coming here again. We're saying that if this our chargeable income minus 600,000, if it is less than 0, please Excel, just return this dash. Otherwise, just do 15%. Otherwise, just do 15% of the balance, which is this minus 600,000. So you notice that it's still the same thing, right? So we'll start seeing whether this formula is working or not. Let's keep going. So that's that. We are done for this other part of the tax band. Moving on to the next part. We'll come again with our formula. Equal to if our chargeable income minus, how much have we taken so far? Can somebody please unmute and tell me?
We have taken
1.1 million.
Okay, fantastic. Thank you. It shows that we're following. So if our chargeable income minus 1.1 million, 1, 2, 3. If it is greater than or equal to, that's about, if it's greater than or equal to 500,000, this 500,000 we have here, let's anchor the 500,000. We're telling Excel that take 19%. Take 19% of 500,000. Right, that closes it. We'll come again and say if this our chargeable income minus 1.1 million. If it is less than 0, then please just return this dash figure. Otherwise, just take 19% of whatever balance we have left of the balance. Okay. So we can see that something we can see that something happened here. Let me be sure that this is working well. Okay, so if this minus 1.1 million is greater than or equal to no, let me just do it again. Equal to shouldn't be giving that figure. That one is correct, except it. So equal to if this figure minus 1.1 million, so 1, 2, 3, okay, is greater than or equal to 500,000. If it's greater than or equal to 500,000, then please give us, take 19%. Take 19% of 500,000. But if this minus 1.1 million, 1, 2, 1, 2, 3. If this minus 1.1 million, if it is less than 0, then return dash. Otherwise, take 19%. Take 19% of this minus 1.1. 1, 2, 1, 2, 3. 1, 2. It's working now because she didn't return that value before. Okay, do we understand? Do we have any questions? Do we have any questions? Okay, so I'm just trying to check something.
Sorry, please. I want to ask. The last bracket, is it 3 or 2?
Okay, I'll check. Correct. Okay. This is it. It is 3. So it's just you closing all of the bracket that you open. We open the first bracket here. 1. We have another bracket here, 2, and we have another bracket here, 3. So you have to close it with 3 brackets. So 3 brackets. Okay. So now we're done with this other part of the tax band, right? So we come to the fifth step. Now we go again with our formula. We're almost done. We'll go again with our formula equal to if our chargeable income. How much are we taking so far now? Please, can somebody help us?
1.6. 1.6.
Okay, thank you. So if our chargeable income minus 1.6 million, 1, 2, 3. If our chargeable income minus 1.6 million is greater than or equal to 1.6 million, which is the next tax band, then we're telling Excel that please just take 21%. Take 21%. I'm anchoring it. Take 21% of the 1.6 million. We're not coming to say that, but if our chargeable income minus 1.6 million, 1, 2, 1, 2, 3, is less than 0, please just give us a dash value. Otherwise, just take 21%. We don't call it 21%. Just take 21% of our balance, which is our chargeable income minus 1.6 million. 1, 2, 1, 2, 3. Close all the brackets. So you can see that the reason why we have dash for that first one. Can anybody give us the reason why we have a dash figure for the first one? Please, can you unmute and answer?
We've exceeded the chargeable income for that.
No.
Okay. Thank you very much. That shows we're following. So now we're done with this part. We'll come back to our tax table with right done. Now we have one more to go. This one says that anything above 3.2 million, right? Just charge it at 24%. Any balance that you have from your chargeable income above any chargeable income that you have, just charge it at 24%. So what we say is that equal to this our chargeable income. Sorry, equal to if our chargeable income minus, we've taken 3.2 million so far. If our chargeable income minus 3.2 million that we've taken so far, if it is greater than 0, right, just take 24%. We don't call it 24%. Just take 24% of the balance, which is our chargeable income minus 3.2 million. Take 24% of the balance. 1, 2, 3. Otherwise, just return dash value. And then we close up. So it returns dash for the first one. So we drag down. Perfect. And that's the end of our tax table. So we'll come here and then we'll do a sum of all of the figures that we have from the first one we did to the sixth one. We sum everything together and then we drag down. And that gives us our payee figure, our annual payee figure. Please, do you have any question at this stage?
Sorry, please take the formula for the last tax band again, please.
Okay. So I said that if, for the last one, we're saying that if our chargeable income minus the 3.2 million that we've taken so far, 1, 2, 3. If it is greater than 0, then we're telling Excel to take 24%, which is the next tax band rate. We're telling Excel to take 24% of this figure, our chargeable income minus the 3.2 million, which is our balance. Just take 24% of our balance. Otherwise, which means that if it is less than 0, otherwise, just give us a dash figure in case we don't have any figure there. And then we call it, take it in, and then we drag down, and then we have our figure. Does that explain it?
Yes, thank you.
Okay, so to get a payee, we just do a summation of all of these things together. Now, to get our annual net income, you remember that what we started with was our annual gross income. To get the annual net income that is payable to that person, so we'll say equal to, we'll take our annual gross income, I'll have to write it down, minus our pension, minus the NHIS, minus the NHF, minus the payee. Remember, I did not remove the CRF because the CRF is just needed to calculate our payee minus the payee. And that gives us the annual net income payable for the person. Okay, so this is giving a minus because remember that I did not put... Okay, so let me write it down here also. Annual net income equal to annual gross income minus the pension, minus the NHIS, minus the NHF, minus the payee.
Okay, meaning the annual gross income minus all deduction, including the payee.
Exactly, perfect. Yeah. So that was just what I did, equal to the annual gross income minus the pension the person is going to pay, minus their NHIS they will pay, minus the NHF they will pay, minus the payee that they will pay. And then we have our figure here. So this is showing a negative figure because, you know, I did not start computing it with the rest. It has no figure. So that's why it's showing a negative figure. So the next step is we've gotten the annual net income. How much will this person take home on a monthly basis? So we'll come and say equal to, this is our annual net income divided by 12. And then we drag down. Yeah. So what this means is that, let me just delete the line to avoid confusion. So what this means is that somebody that has a, if we add all of this together, someone that has like a gross pay of 150,000, a monthly gross pay of 150,000, at the end of the month, the person will be going on with 126,000. So your gross pay on your offer letter is 150,000, but your net pay is 126,000. So this is the amount that you as an accountant would pay into the account of the employee. Now, as an accountant, it does not end there. If you were an employee that was trying to calculate how much your net pay will be, it will end here for you. But because you're an accountant and you're the one in charge of remittances, it does not end here for you. Now, remember that pension is a two-way thing. The employer contributes and the employee contributes. What we've only captured so far is the employee's contribution. We also have to capture the employer contribution because it is your job as an accountant to remit that amount. So we'll come here You can just put another figure here for employer pension. Your employer pension is 10% of a minimum of 10% of the basic. Can you see my screen?
No. I see it.
Yeah, yes.
Okay.
Okay. Please, can somebody confirm that they can see my screen?
Yes, you can see it.
Yes, you can see.
Okay. So it's 10% of your basic plus housing plus transport, right? So that's the figure. This is the employer contribution for each of the staff. So now, as an accountant, you have filing obligation, right?
So it means that it means for both the employee and the employer is the same basic housing and the transport summation of both that you take 8% and 10%, right?
Exactly. Yes, that's correct.
But you kept using the word minimum, so therefore it's possible for more than 8% to be deducted from the employee's salary.
No, okay. So when I mean minimum, the minimum is not in terms of the rate. The rate is fixed, 8% and 10%. But then it does not always have to be basic housing and transport. A company can decide to take 8% of your total annual gross. Like there was somebody on this call earlier that raised the same issue. Your company can say they want to take 10% of your annual gross. If you notice, your annual gross here, the 10% of it is actually higher than your basic housing and transport. So they can decide to take 10% of everything.
That's true, because where I was before, they were doing gross, 10% of the gross.
Exactly.
I got on that they were doing housing and transport and they're doing 8%. I was now wondering,
Exactly.
where I was before, the manager was doing it wrongly. But now you make me to understand that it's both correct.
They are right. It's correct. It is both correct. So that's why I kept on using the word minimum so that everybody's aware. Okay. So now as the accountant at the end of the month, you are going to remit your payee. So for the payee figure, I mean, that's very easy. You just pick the figures that you have here. So what you can do is you copy the name of the, I mean, we all know how to do these things, but let me just do it for the sake of doing, right? We just copy the name of the employee, put it here. So we'll call this our payee table.
But they're not seeing your table. Where are you doing that from?
Okay, so I'm copying it from here. I'm just copying the name of the employees. Can you see it? I'm copying from here. From here, can you see? Please confirm if you can see it. Okay.
Yes, you can see it.
Okay, so you copy the name, then you come to your payee computation. You Control C it, and then you come here. You paste as value. Okay. So then in determining where you're going to remit this payee to, so can somebody just give us like a run through of how we're going to determine where we're going to remit this payee to? Please, can you just?
Are we paying the annual or monthly?
We're paying okay, so this figure we have here, thank you very much for that. This figure we have here is annual. So to get the monthly, so we divide it by 12. So we'll just do that, Control C. We drag down, we paste special, we divide. Okay, so this is the monthly figure. So this is the monthly figure that we have. Okay, so can somebody please explain to us how we're going to remit this payee that we have on a monthly basis? Please, can somebody explain who we are going to remit it to?
I think we need to Lagos State.
Okay, we're going to remit it to Lagos State.
You made mention of depends on where the employee is. For instance, if the company is in another state and the employee is in Lagos State, so it therefore means that to be remitted to Lagos State government.
Fantastic. So what we need to understand is that in determining the internal revenue service you remit this payee to, is not a function of where your company is located. Because I mean, I worked in a place where the HR was remitting all of our payee to Lagos State, and we had staff that were working that were living in other states. It was not the right thing to do, and as accountants we shouldn't do that, right? So where you're going to remit the payee to is the state of residence of that your employee. If you have employee in 10 states in Nigeria, you remit to all the 10 IRS. So you won't pack everything and give to Lagos State because your company is in Lagos State. So that's just to clarify that part.
So can
That's the
you
issue.
just
People are trying to
throw more
avoid
light?
the
Can you
stress
throw
you have to
light
go
on
through.
how, for instance, if you have employee in 10 states and as an HRO and the HRO is based in Lagos, how do you think the HRO can remit to all the 10 states while he's in Lagos? How do you think that can be done?
Okay,
That's
so
the
that
people are trying to avoid the stress because
okay,
remitting to
Is it via
various
the portal?
states.
I don't know if the portal can actually do that because I've been using
Okay.
the LRS and portal, but I don't know if you can select state from that portal. I've not tried that.
Okay, I love that. Somebody was saying something else, so I'll answer both together, please. Sorry, Mr. Something was saying something. I didn't get your name. You're saying that's the issue. Please, can you repeat yourself?
So that's the issue that accountant go through because if you have employees from various states now, it's difficult for you to be moving because they are not all states has online portal that you can easily access. Do you get
Okay.
some states you have to go into the tax office to remit.
Okay, so while I understand all of this complaint, but life is much easier now, and I feel like all we just need is information. So I used to feel this way too, that how are we supposed to go to their states? But there are different portals online that can actually help you from the comfort of your home remit to all of these states. One of such portals, there are a lot of private owned portals that I will not want to say now because I cannot vouch for anybody. I don't want trouble. But the one that everybody knows of is Remitter. Through Remitter, you can pay to any state, any internal revenue service. Try it. Go to Remitter portal. Select the internal revenue service.
Remitter is owned by Lagos State.
No, Remitter. I don't think Remitter is owned by Lagos State. No, Remitter is not owned by Lagos State.
The issue is with Remitter is that it is not for all states. For some of them, they have different for Ogun State now. Once you log on to Remitter, it is demanding for we call this thing payment codes.
Okay.
Like the last pay I wanted to pay, it was for Nasarawa State.
Okay.
So we were having challenges making use of Remitter. So I had to go online and make research. So I later discovered that you can navigate that through the banks. So once you have each state have their revenue codes. So once the revenue code is available, you'll be able to, for every state, whether Nasarawa or Kaduna, you'll be able to navigate that through the bank. Once you have the right payment code, you can.
Why you are using the revenue code of the states?
So the last one I paid for our branch at Kaduna. So and I make use of Zenith Bank. I just went there. So make an inquiry regarding the information that will be needed in order to navigate the process.
Okay.
So the banker gave me the taxpayer ID. Once the company has taxpayer ID, the revenue code of the state, you are good to go. So that was how I was able to navigate that Nasarawa payee for last month. So because we are having pending payments, so I just used the opportunity of paying from April to July. So that was how I was able to navigate it. So basically, banks can help, they can assist once we have the necessary information needed to make payment for every state, even if we are in Lagos. So the ones
but the thing is, sorry, Bishop.
Okay.
Like some states, we need you to come and do filing, and therefore for them to issue receipt. Okay, let me.
That is just giant. That is just giant. But
so let me just say, So the thing is, after paying via remitter and doing all the remittances, quite fine, you've done remittances, but then they still expect to come and do physical filing of those evidences for them to document issue with receipt. So in such situations, what's the way forward?
This is what.
Okay, for me. Okay, please go ahead.
Okay. So
no, go ahead, please. There was someone that wanted to answer.
This is what I think you can do. So if you have employees in other states, you can delegate that to them. Once you make payments here, you can scan and send the evidence of payment to them, and they will go there for the filing and send it back to the head office. It's as simple as it is. So that is what.
That's fantastic, honestly.
And if you can't do that, there are consulting firms that can do that on behalf of the company. But it's just that it will incur additional cost to the company. So there are some consulting firms that deals with that. That deals with filing only, but they are going to charge your company a lot of money. So that is additional cost on the company.
So I believe that your first approach would really work. I mean, I think it makes a whole lot of sense, that your first approach. Thank you very much. I think it works. So I'm sure we've gotten some sort of answers to our questions, right? So we don't have any excuse now to be paying only to Lagos State, okay? Okay, so the next one, now we've done the payee table. The next one you want to do is your pension table. So for the pension,
you do the payee table?
The payee table is here. It's highlighted in yellow.
Okay.
It's highlighted in yellow. Okay. Please, can you mute yourself? I don't know what this is. Okay, thank you. Okay, so for the pension table, we'll do the same thing again. We'll copy the name of the employees that we have. We'll copy their name. Paste it here. Now you come with the, please, can somebody confirm that they are hearing me? Oh, it's just too quiet. So you confirm with the employer.
Yeah, we can hear you.
Okay, thank you. Then after, for the pension table, the name, okay, you can mute now. Thank you. Okay, so then we have the employer pension and then the employee pension. Then we have the total. So you come here, the employer pension, which is the last time we calculated. You copy it. This is already on a monthly basis. You would agree with me because the basic housing and transport that we use, it was monthly and we didn't have to convert it. So there's no need for us dividing again. For the employee pension, this one is in annual because remember that we have to multiply it by 12. If you check the formula, we have to multiply the figure by 12. So we'll paste it here. And then divide everything by 12. Paste it and divide everything by 12. Paste special, divide. Okay. So we have our figure, right? This is what we have. So the total pension you're paying for a bube on a monthly basis is 17,100. The pension you're paying for Toby, please, can you mute yourself? The pension you're paying for Toby, who is that person? Okay, the pension that you're paying for, the pension that you're paying for Toby is 21,960. So please don't make the mistake of only picking the figure, the employee figure that you calculated above as what you're going to pay. No, that's not all you're going to pay. You're going to pay both the employer pension and the employee pension, the summation of both of them, and then you pay it. So this is the amount you remit to their various PFA by the end of the month. Okay, so this is just me going a step further, right? So I'll just need somebody to please tell us the accounting entries we have to pass for the payee, how we book it on the system, when we finally make the payee payment, the accounting entry to pass, and the same for pension. Another person will answer for pension. So for the payee, please, can somebody volunteer?
Sorry, I didn't get your question.
Okay, so my question is, now that we've got computed this payee figure, right? How do we book it? How do we, what is the accounting entry for us to pass? How do you recognize it in our books? Do you recognize it as an expense? How do we treat it? How would you treat it? So I just want to be sure that from end to end, we all understand what to do, not just computing this figure, how it should be recorded in our books. We're on the same page on that. So I need somebody to volunteer and explain how they think it should be treated. So there are two legs to this thing now. I want you to tell us how you treat it at the end of the month, how you recognize it at the end of the month. Remember that payee is paid in the following month, the 10th of the following month. How are you going to recognize it when you eventually pay it by month end? So please, can somebody please?
Okay, let me make my mistake. I want to try. So if I make mistake, it's fine. So that
yes, it is. Yeah.
Okay. Now for the salary, I will recognize it as an expense. Then for the payee and the pension, I'll recognize it as current liability, depending on when it is paid.
Okay, I want you to give me like double entry debit. What am I going to debit? What am I going to credit? Okay, so for the payee, what are we debiting?
We'll debit the salary account, which is employee salary. We'll debit it.
And then we're crediting what?
We'll credit the
Okay. Okay, fantastic. So this is what we book at the end of the month, right? So when we now finally make payments by 10th of the next month, what is this accounting entry we need to pass?
Debit payee and credit bank.
So we debit payee or payee payable?
Payee payable.
Okay. And then we credit the bank.
Okay. Yeah.
Okay. Okay, that's fantastic. That means that everybody's on the same page with this. Thank you very much. So this same thing is also what we'll do for the pension. The pension will be debit salary, credit pension payable. When you finally pay it, you debit pension payable and you credit your bank. So that is that about that. I don't know if we have like any questions. Yeah, we can take questions. I mean, we're pretty much done with the class. So this is just general question. Do you have any questions?
Yes, I do have a question. I asked a question earlier before the computation started. I mean, before we went deep into the computation of the CRF. Okay. I just remember that the CRF. No, not the CRF.
Okay, what's the question?
The chargeable income. How did you arrive at that chargeable income again? I just need a refresh. I mean, help me to refresh my memory how we got the chargeable.
So first of all, this is it. This is the computation for the chargeable income that I wrote here. Your chargeable income is equal to your gross income minus your pension.
That's gross income 2. Is it gross income 2?
No, your gross income 1. Your gross income 1. So it is your gross income 1 minus your pension minus your NHIS minus your NHF minus your CRF.
Okay, that's how.
So this is it I wrote here. Exactly. Yes. Yes, that's how. Or alternatively, you could just do your gross income 2 minus your CRF. But I didn't want to confuse anybody. That's what I
was having in mind. So I just said, let me confirm. I just said
minus exactly. It's still the same thing, but I don't want to confuse anybody. That's why I just wanted to take the longer route. Yeah.
Okay. Now, secondly, the respect of pension. I worked in a place where for 2 years they didn't pay me pension. I mean, why I met them having pension liabilities since 2018. And even up to date. Please, what do I do for them to be able to pay me my pension? Because somebody has advised me to go to Pencom Portal and reports. Is there any other way out?
Yeah. I mean, like the first way that I would suggest is talking to them amicably. For 2 years, that's a lot. That's your retirement days there. It's your money. I mean, why should anybody hold on to that kind of money? So you should
my own is 2 years. I said that when I check back, 2018, 2019, far back 2017, they have people pension that they don't remit it. In fact, for tax, the tax is just there. The tax is just there 4 months, and they have a way of just even manipulating it to pay minimum tax. I don't know whether that's legal, how they do it. They try to manipulate the payroll in order for the payee to be shorter, to have a minimum amount to pay. But I know that's illegal. But me, I'm only concerned about my own pension.
So have you spoken to your HR about it? Have you spoken to the HR? Asked them what exactly is delaying the pension payments?
I just learned that because of all the issues there, was it not on Wednesday or Thursday? Okay, on Friday, somebody called me that the HR has resigned.
That one is, I don't know. That's a very serious one. No, that's like a company cultural problem. It's. I mean, 2018. That's 5 years ago. It seems like they don't have intentions of ever paying. 5 years ago. No, that's serious.
They employ people, and after you've worked, they ensure they accumulate the pension, and before you know, they sack them.
That's unfair, really. I mean, that's really unfair. I mean, you could consider the route of whistleblowing on pension portal. I hope they take it seriously, because I feel like they are not enough strict regulations when it comes to this pension. A lot of companies deduct and they don't remit, and I feel like there's nobody coming to check them. You know the way FRS come for all of this, their audits. There's this fear in your heart.
Exactly.
I hold on to
That's what I'm
government
concerned about the payee. Now for the
Exactly.
payee, I still do not have a TCC, even though I've paid for more than 2 years. I don't have TCC, and I think I'll look for a way of having my own TCC, because I've been paying pension. Those people who are not serious about anything. I mean, might be paying my payee, but for the pension, at least I know that's my money and I need to get it. That's what I'm
maybe you might
for it.
have to, because as it sounds, it's really bad. So you might have to consider like the extreme measure of going to like whistleblow on them. So hopefully pension does something about it. They come to audit them. If there were instances where pension come to audit these people, and they know that if they find you wanting, the penalty is so high, people would they'll sit well. But it just seems like, because it's not government money, nobody's really saying so much about it. They're not really chasing these companies to pay. So you might want to consider that route. You might just want to consider that route. You might be lucky and they just pick up your complaint and visit your company. So yeah, I mean, it's your money now. Over 2 years. That's serious.
Can I tell you my experience? Like, hello.
Okay.
Hello.
Yeah, we can hear you.
Yeah, I said.
Yes, we can hear you. Yes, we can.
The late that said that they have not been remitting our pension. I think based on my experience, though I work with a consulting firm and they outsource us to one firm, one company, manufacturing company. So we notice that they have in their books, they have payable, pension payable, NHA payable, like all sort of liability. What we did is that because we as consultant, we are here to do the right thing. And even though we are recognized as an international firm, so we discuss with the HR and we'll let them know that, okay, these are the implications of all these things, and the right thing has to be done. So first of all, I think the HR must be put into question. And another thing again is, I might say, sorry to say that the accountant again might somehow not be not that competent, because as an accountant, these are the things that even HR don't want to do. You need to push them to do such and to do the right thing. So we met with the HR, we discussed with them, and they said, okay, there is no problem. And what we did was that with the account department, we were not the one that was responsible to remit all those outstandings. We need to get all the NHF pins for the staffs. We get all the pension pins, and then I think the pension pins will not depend on their pension, different pension houses. So we have to now consolidate. If you're in Stanbic, we consolidate. If you're in maybe another pension house, we consolidate to that particular house. At the end of the day, we'll now sum all what we are supposed to pay and pay. They will have their account. I think then we are finding it difficult to get all those RSS accounts. We need to browse online, check their website, get their account details, and we'll pay, we'll confirm, we'll call. At that you their contact is they can call and they'll give you their details. They will now use some of them will see their schedule to you on how you even pay. So when we now pay, after we pay, we'll have to now send the schedule and the evidence of payment to those pension custodians. Automatically they will not credit all the staff. So in essence and in summary, it's just to I would say to an extent the accountant need to sit up as well as also muzzle the HR very well to do those remittances. You as a staff, you can disturb the account, you can also disturb the HR, unless if it is management that have that the decision that they are not supposed to be remitting such. But to me, these are the things that they're supposed to be doing. So that is just my own clarification about that. So it's not something to get angry about. The HR should always be there to help out. A competent and a chartered accountant should also be able to tell management the implication of all these things. So that is just what I'm doing.
You're right.
Yeah.
Perfectly said.
Well,
so before we take the other questions. Okay. Okay, so before we take the other questions, right, I have not mentioned this thing about Payslip, right? So I'll just do it like a bit of explanation about it. So there are companies where you do not have like an accounting software. and then everything is done manually on Excel. That's the reality, right? And then your employees will come and meet you and say that, please, we need our payslip for a particular month. So this is, you can come up with your own payslip. This is just a simple, I mean, this is very basic, right? This is just me just playing with Excel, but this is how you can do your payslip. This is the monthly payslip. Everything on this payslip is linked. It is linked to this payroll here. So what I just did is I put the basic, the housing, the transport, benefits in kind, 13th month, and I link it. So the employee in question is Ebube. I don't know how I'm supposed to explain this now. I link this employee's name to the name here, to Ebube. So all of the details that you have here is for Ebube. The deductions also is for Ebube. The net income is for Ebube. The net income for Ebube is 117,000. If you check what we have here, it is okay, sorry. That's weird. The gross income is 150, pension is 17.1. Okay. So the reason why it's different is because I made a mistake in the pension that I used. I used 17.1 as the pension instead of using just his own contribution, which is the employee's contribution, which should have been 7,600. So this year should be 7,600 for Ebube. So the amount net income is 126,984, which is the same to what we have here. So once you have this payslip for each of your employee, I mean, I worked in a company where this was how they were sending us payslip. So what you can then do is you can just go to your file and then you export this page as Excel. You can export this particular page alone as Excel, and then you save it and send to whoever needs the payslip. And that solves the problem. I don't know if you have further questions.
Yes, I do. Okay. My question is, hello?
Okay, please go ahead.
Okay, so my question is, when you are posting your pension, when you're making the general entries, now,
okay.
In the company's books, are you posting the total of the pension? That is for employee and employer. Like, are you merging them to post, or would you just be posting the employer?
Okay, so I mean, it's a matter of preference, right? At the end of the day, both the employer and the employee pension has to be in your book, and it's still going to affect your salary. So what in some companies, just for reconciliation's sake, what we do is at the end of the month, you're going to debit salary with maybe the total. Let's say the total we have here. So I'm coming, let me just quickly do a total. So I can explain. Okay, so let's say the total we have here, you debit salary with this total here, right? That means the addition of both the employer and the employee. Then you credit employee pension payable with that portion of the one that is for employee with 410. Employee pension payable, you credit that one with 410. You credit employer pension payable with how much? 513. So this is just for reconciliation's sake, to make reconciliation easier. So you can tell how much it is, how much liability you have to pay from the employer contribution, how much you have to pay from the employee contribution. But at the end of the day, both the employer pension and the employee pension, all of them eats your salary account. All of them goes into your salary account. I don't know if that answers your question.
Yes, it does. Thank you.
It did not include the payee.
Okay, so
we are fair credits the payee, right?
Yes, the payee. This is correct for the payee. You know, payee does not have two parts. Payee is just it's only employee that is paying the payee. So you just debit salary and credit payee payable. Unlike pension that has two parts, employer is contributing, the employee is contributing. You understand?
Okay.
Okay. So any other question?
Yeah. Sorry, I just wanted to get like I have two questions just to get a clarification. Like though I was on transit, I didn't join the class as apparently you guys started. So for payroll, like, is it that each company in determining all those incomes, is it that each company has their own subjective way of doing it. Like we don't have a like maybe a standard way of saying that, okay, this must be the basic housing and transport. So that means all those figures are based on their own discretion, right?
Yes, it's based on company's policy. There's no fixed amount. It's based on company's policy. Okay, thank you so much. I think I would not be able to take further questions. We want to really round up by 8 o'clock. Okay, so what will happen is so I will just drop my LinkedIn name. I don't have like the link. I mean, I can't start dropping that. So you can follow me on LinkedIn. And then if you have questions.
Patricia, let me drop your LinkedIn link here. So I'll look for it now.
Fantastic.
Yeah.
Okay, thank you. So you can, any questions that you have.
My challenge is just the Excel formula. Is there any way you can help me how do I go about learning advanced Excel for me to use that formula seamlessly?
Okay, so just go on, on YouTube and type how to use if function, how to use if function on Excel. If you perfectly understand how to use if function, you'll be able to use this thing seamlessly. You understand?
Okay,
so any questions that you have regarding this class, please just drop me a message on LinkedIn. Please title the message with AJH payroll training so that I can attend to it, and then we'll take it up from there. Thank you very much.
Or ABC of payroll, right?
Thank you.
Yes. Okay.
Thank you so
much.
Thank you so much, Patricia, for your
Then what about the payroll?
Thank you very much for your time.
You're welcome. What about the payroll? What?
The payroll template.
I don't know. Like I said, I don't know if I'm going to share it or not, because the goal at the end of the day is for everybody to be able to create their own template.